Welcome back to the Aftermath Show, where we get to talk about things that may have happened or have happened and find solutions to them. My name is Kamuga Pai, the insurance guy. Happy to host you guys and happy to be here all the time. Now, today's topic, we're going to discuss about how life insurance is an investment or a risk management tool. The thing that has been asked everywhere. So today I have a nice, beautiful lady that is going to dive more into insurance or life insurance as a risk management tool. She will tell us how it works, what is it about. So I'm happy to be here with the lovely Nancy. Nancy she's a financial advisor with Old Mitchell, very passionate about finances, and a former banker, a very hardworking woman. So whatever she's going to talk about is going to be of benefit to the viewers. So Nancy, tell us about yourself and you're most welcome to the show.
Thank you, Pai, once again. My name is Nancy Apio. I'm a financial advisor and very passionate about empowering individuals, professionals, and business people to achieve their widest goals or their dreams in life. And I'm happy that you have invited me here to your show.
And thank you for accepting my invitation. You're a very busy woman. Yeah, I'd make an appointment to have you here. But thank you so much. So Nancy, about today's topic here, is life insurance a risk management tool or not? So tell us how it is or it's not. Over to you.
Life insurance is a risk management tool because there are three things that life insurance offers us, mainly financial protection,
Okay.
peace of mind, and stability. Once you have life insurance, you have that peace of mind that even if anything happens to me, I have a fallback position. I know that if I was involved in a nasty accident, or if death happened, or in case of critical illness, I know that I won't be starting from scratch, but I am certain that the insurance company will carry that load for me. So that's why it acts as a risk management tool.
So what risks are those that you're talking about? You know, that life insurance basically focuses on.
Okay.
Yeah.
There are a number of risks that life insurance focuses on. One of them being critical illness.
Okay.
You find that the policies that many individuals take on have what we call a rider of critical illness. Critical illnesses may be something like cancer. Someone has been bedridden for quite some time and is suffering from cancer and has taken up, say, an endowment policy. You'll find that some insurance companies have riders that actually will waive off certain premiums if a client is critically ill. So that way, even if the client is ill, they are certain that they will probably get their maturity at the end of their payment period.
Okay.
Even when they are ill and probably they cannot work, they are certain that they will get their money. And so you see, it's more financial protection, very well knowing that I took up this policy when I was fine, but now I'm in this state of I'm critically ill. I'm unable maybe to pay my premiums, but
Unable to work.
Some people have been involved in very nasty accidents, lost their limbs. They can't work, and this is where now the wave of premiums set by an insurance company comes in. And so I had a client, for instance, who was involved in a nasty accident along in Lira.
Okay.
And she broke her limb. And I recall her premium being waived off. And for that time when her legs were, thank God it wasn't a total permanent disability. But even when it was a partial disability, they waived off premium for that time when she was disabled. So you imagine her in that state, but very happy that the insurance company was able to waive off that premium. And then when she was able to carry on to work, then that's when she started paying off her premium. So it comes off as an indeed a risk management tool.
So there is critical illness, things like cancer, heart problems, stroke, people getting stroke, unable to perform their duties at work. Life insurance will be there to take care of those, your needs. That's one. Two, talking about disability. Also can, it's a risk that probably human beings get. And guess you have a life insurance policy, is the money that will come to you.
Exactly.
So the third risk.
The third risk is something that we all don't plan. No one knows when God will call them.
Absolutely.
And that is death. And that's where now life insurance comes in handy, especially if you know that if you know you have people you care about and they are dependent on you, it's very important to take up a life insurance plan. Because once you're here and you're no more, that's when now the insurance company will come in to fill that gap for you. So when we have a situation where a policyholder passes on, what happens is, like for the case of UAP Old Mutual, there is what we call a life cover benefit, where should a policyholder die, immediately 10% of their target amount, what they wanted to achieve in a certain period of time, is paid to them. Take, for example, if your target was 100 million and you passed on. So the insurance company would pay immediately 10% of 100 million. And 10% of 100 million is what?
10 million.
10 million. So immediately that money is paid to the person you had put as a beneficiary. So that is meant to support the family, especially when they are grieving. But the insurance company does not stop there. And so what happens is the insurance company then takes on the burden of now consistently paying those premiums up until the maturity period.
Okay.
Then you, the beneficiary, at the maturity period is when you are called to receive that money that the policyholder would have received if he was alive.
Wow.
So you see how it offers lots of financial security,
absolutely,
financial protection. So that way you're able to sit back and know that, okay, if anything happens to me and I'd taken up education plans for my kids, I am guaranteed that my children will at least go to schools and go to the schools that I had always dreamt of them to go to. Because you've seen circumstances where someone was rich, had the money, the children were really going to these high-end schools, very good schools. Then bingo, death happens, and children are now going to UPE schools, low-level schools. Why? It's because there was no continuity in a sense that probably the people now who can take care of them can't afford to pay that kind of money that the parent used to pay. But if you have, for example, taken up a SOMESA education plan, there's what they call the child income benefit, which starts to pay 1 year immediately after death of the policyholder. So the child income benefit is usually 12% of your targeted amount, the maturity. Let's still look at 100 million. So 12% of 100 million is what?
12 million.
Yeah. So that literally means that every year, UAP Old Mutual will be giving the beneficiary 12 million shillings to carry on.
Until when?
Until the maturity of the policy. So if a child was going, say, to Kaboja, and they were paying, say, 3 million per term, 3 times 4? Or 3 times 3 actually. 3 times 3 is 9 million. That actually even means that this beneficiary even still has some
extra money for pocket money.
Yes, pocket money or to buy the necessities for the child to go to school. So I think you can see how this is actually a form of it's a financial safety tool and a legacy building tool, like we'd also say.
Yeah, thank you. That was awesome. Indeed. So, talked about critical illness, talked about disability after getting an accident. Now, death. Death is the most touching thing. You know, life becomes difficult when the breadwinner passes away. So, if this person didn't have a life insurance policy and the breadwinner passed away, life would be very hard for that family. But if they had a life insurance policy, I mean, money would be coming in.
Exactly.
Now, there is another risk I need to talk to us about, the risk of old age. Is it a risk or it's not? I keep asking myself, is old age a risk in life or it's not? And if it's a risk in life, how can you maneuver through it with a life insurance?
Yeah, I think whether we want it or not, we'll one day be old. Yeah, we will grow old. Yeah, in a way it's a risk because each time you're getting there,
Yeah.
it comes along with diseases. We've all seen some
Energy
of
levels are very low, you can't work anymore.
exactly.
Yeah.
So it's always good to plan early
Yeah.
and start. I remember my first boss telling me that the moment you start to work, you need to plan for your retirement, and he was right. And so these life insurance plans actually help us do that. The moment you start working, start that life insurance
Save money
plan.
for retirement.
Yeah.
Yeah.
And there's a principle in finance that says pay yourself first. I have discovered that the best way to pay yourself first is through those life insurance plans. Why? Because it's a disciplined approach to saving. If you're you notice when you take up these policies, you find that either you have to set a direct debit off your bank account. Now, if that direct debit is set off your bank account, then you realize that it's automated. So what does that mean? And it's up to you to set up the date. If I receive my salary every 20th, then I'll just set up a direct debit of say 21st. So that means that every 21st, money is going off my account. And that way, I feel I've paid myself first. So whatever balance of money I have left, I don't care if I go out with the girls or buy that nice shoe. Because I know I've paid myself first.
Absolutely.
And I know I'm also planning for retirement. So it offers an opportunity for us to plan for that that time when we'll be old. And right now when you're still young, now is the time to take up these policies, because the earlier you take them, you find that even the premiums you're paying are way lower than say a 60-year-old who is taking up the same plan. So insurance also is based on that. So it's always good. Start now, start early, start now, and take advantage of being young to pay less premiums.
Absolutely.
Than wait to turn 60 and you're starting to take up a life insurance policy.
Yeah. So, so we have seen that the truth is life insurance is a risk management tool. Yeah, we can use it to probably to take care of the risks that happen in human beings, probably to get some money. So we talked about critical illness. Talked about disability, accidents, death, and old age. All the things must happen to a human being. Some must happen, others might happen. You know, death must happen also, but we don't know when it will happen. So when it happens, and you have the life insurance policy, at least there will be some money that goes to your dependents. So that's awesome. So what do you advise people to take up life insurance policies? What do you advise our viewers? Yeah.
Like I've earlier said, I would recommend you start immediately. Start when you're young. For those who have just started working, now is the time to embrace life insurance policies. You yet don't have responsibility on you, so this is the time. If you have just started working, grab that opportunity to take up these policies. This does not mean that those who are already working or have worked for over 5 years don't need to take it. I think for us, everyone needs to take up a life insurance plan.
People say life insurance is for the rich. Is it true, or any person can buy life insurance?
Anyone can buy life insurance.
What's the minimum someone can buy for a life insurance policy?
Okay.
We'll talk about our guys who are on TikTok, the young people there.
Okay. The minimum is about
100,000 shillings.
100,000 shillings. You can get a life insurance policy in an insurance company within Uganda. I think 100,000.
Talk about that insurance policy that you buy for your dependents, people you care about, like your parents. Our viewers there are people they care about who don't have insurance. But when those people probably pass on or get disabled, there's money they will spend on them. So when you buy a life insurance policy and probably have money for those people. Tell us about that.
We have what we call the Family Life Protect policy, and this has been designed to cater for events like in the event of critical illness, disability, and death. Unless you have somewhere to start from. So at Old Mutual Life Assurance, with only 60,000 shillings, paid once in a year, or could I say annually, you're able to get yourself a cover or a life cover of up to a tune of 3 million
Wow.
Uganda shillings
Wow.
in the event of death of your loved one.
Mm.
And it goes as far as the largest or biggest cover is 400,000 shillings, which gives one benefit of up to 20 million
20 million.
Uganda shillings
Wow.
in the event of death of your loved one. So I would encourage people to take up these policies. Imagine with only
60K.
60,000
Yeah.
shillings, you're
Per
able
year.
to get your, just once in a year, you're able to get your loved one, like your parent, your uncle in the
People you care
villages.
about, eh?
People, as long as you have someone who is dependent on you. That is to say, if, for example, something happened to my grand uncle or my jaja, will it affect me financially? Will I have to pick from my pocket? If you know that you have to pick money from your pocket, then it's worthwhile just spending that 60, 100K, paying it once, and knowing that should this happen, I know that I won't have to dip into my pocket, but rather I'll run to my insurance company.
Thank you, Nancy. One more word to the viewers on how they can look at life insurance, and probably your parting shots.
Personally, because as Nancy, I have taken up this life insurance.
You have
policies.
one?
I have.
You have so many.
I have. And for me, it's because I started taking on life insurance as early as when I started working. So I have experienced the benefits of what it means to have a life insurance plan. So when I talk about these plans, I talk with confidence because I have benefited from them. I've also seen how they have enabled me to grow my investments. You know, there is power in starting small. If I tell you, some of us started those days with policies as low as 50,000 shillings.
I remember my first job. 60K
yes, just
month.
because we had just started working. And luckily, I had been informed about these policies, thanks to my friends who also were working in insurance companies. And I took advantage of that and started as early. And I have benefited from like receiving maturity benefits and investing them in things worthwhile that have helped me grow my investments. So my parting shots are, take advantage of the power of saving, and start saving now, because when you start small, trust me, that is going to expand little by little to form, the kind of big investment that you're looking for. Don't wait to have that big money to start. Start small. Start with what you have, and I'm certain that you'll actually achieve your financial goals.
Thank you, Nancy. Don't tell us that she's a past president. What's that thing of Rotary? But thank you so much, Nancy, for coming through. And hope our viewers benefited a lot from this session. Hoping to invite you some other time and talk about other things about finances,
Thank you.
I'm very happy to have you here. So it's been your guy, Kamonga Pai, the insurance guy. See you when you see me.